Hello, it's Dale Ellentenny from Loan Cabin. Welcome to 2019. It's going to be an exciting year. I'm here to talk to you about a new program that's been around for a little bit but is really evolving here, and it's called the Asset Depletion Program. And what that program is, if you're fortunate enough to have a substantial amount of money in your bank account, and although you're not working, you may be able to still buy a home. And let me give you an example of a client that I'm working with right now. My client has a decent amount of money in her bank accounts, more than 6 figures, in the process of selling her large home where she and her husband lived for 30 years. He recently passed away. She expects to walk away with $150,000 to $200,000 out of that home, and is looking to buy a condo for $100,000 to $150,000, maybe $200,000. So I'll use $200,000 as an example. What is required is if you're going to buy a $200,000 condominium and you're putting 25% down, that's $150,000. You have to have 10% above the $150,000, so that would be $165,000 in liquid reserves, which she'll have between the savings she has already and the proceeds from the sale of her home. From there, they take your total amount of assets. If it's more than 165, if it's 200, they divide that by 60 months as a qualifying income. So they're not depleting the assets per se, but they're using it in 2 different ways. And then if the debt ratio is under 50%, and what I mean by that is your total debts, housing, credit cards, installment, that kind of thing, divided by the 60 months of assets, that's how you're qualified. So it's a great program. Some people think they're unable to get a loan. Some people don't want to do a reverse mortgage. It's a great alternative to all those products. Thanks and have a great day.